Welcome everyone to another episode of Backtesting. Backtesting the Index Futures 2022 data. And today we are going to be backtesting Tuesday the 18th. So, some of you might see that my chart looks slightly different. I just sort of deleted the previous high POIs and then just redid them. I just wanted to just change the colors of them. So the more important or the lower the time frame they are, the darker the color, so to speak, because that's obviously the key POIs that are of interest at present. So I just wanted to make that distinction clear, but all the levels are pretty much the same as what we had before. Still looking, or despite the fact that we appear to be in a market maker sell model, if we go out to the daily, we could probably see that a little bit more clearly. Yeah. So despite being in that, I am still wanting to buy the market. The market hasn't given an opportunity to sell, which obviously selling would be the preferred the preferred action idea, if you will, that I'd want, but ultimately it hasn't presented that. So currently we're below the true week open. So we're gonna go through that top down analysis. So let's get that ready. So we are doing, let's say the 18th, or was it the 19th? Yeah, I think it's the, sorry, I put a previous date incorrectly and it's throwing me off, but I think we are doing the, what time's that? Maybe it's not. Maybe it is. Maybe we are actually. Sorry, no. We're doing Wednesday. Sorry, I tell a lie. Oh, look, yeah. Yeah, sorry, we're doing Wednesday the 19th. No, not Wednesday the 19th. Ignore me. We are going to go and do, yeah, Wednesday the 19th, sorry. Okay, so let's just make doubly certain where we are here. Yeah, 12 o'clock. Let's just move. In fact, let's not worry ourselves too much with that. Let's go to the next session. So that is beginning of the new day. So I want to go to here, and I want to go one more. Okay. So now if we venture back to the 4 hour, let's see what we've got. So I, for one, am not seeing any high probability buys, which is what I would prefer to see based on where price action is in relation to the true week open. So let's go through Wednesday the 19th. Now again, just to reiterate, we did anticipate that these were going to be low probability conditions, for the mere fact that these days are devoid of any high impact news. So the fact that we know that even today we've got pound news, but there is no dollar related news this entire week. So this is if you will, we're sort of testing or walking on uncharted ground here, but we're still trying to frame a high probability trade model to take a trade. So let's check up. So IOF and ISS, we know it's currently to the downside. We know it was initiated up here, so I'm just going to make reference to that because that could be a point of interest at a later point. Okay, so for me, important to mark this up, and I think that was with YM, but we'll check shortly. Yeah. I'm just going to take the lower one out, not necessary to have that. Okay, bear with me. Okay, right, so we know IOF is to the downside, right? That's clear. We can see we know we've had a high time frame displacement, so I've noted the high time frame displacement lower, where price was manipulating old highs whilst displacing through old lows. Okay, so that was a clear one clear indication of institutional order flow being to the downside. Institutional sponsorship, however, we can see that's to the downside because bearish fair value gaps being repriced and rebalanced, or being left unfilled, with the market showing a willingness to reprice lower. Okay, so ERL to IRL, this is probably, this going back out to the daily, we can see here internal range liquidity, price has fulfilled downside objective here, which is this old low. Okay, so I'm going to make a note of that. Okay, so we know on the daily that the market traded up into internal range liquidity in the form of the SIBI daily, therefore our immediate attention turned to the old low. Okay, so this has been fulfilled with price tapping into the old low. Let's be specific, Q2MC, sell side liquidity pool. Okay, so important to note now that I'm moving to the sidelines to await further information. Okay, so to me, just going to drop back down to the 4 hour. It's not looking, it's looking very low probability again, for a number of different reasons. Okay, so where's price in relation to the true week open? So currently all members of the IFT are below the respective true week open. So we can see the true week open here, here, here. Yep. This represents potential for high probability longs. Should this be paired with a high time frame cracking correlation at the lows, which currently I'm not seeing. Okay. Now, so again, there's nothing to do at present, and then looking at elements of my model. So we're below the true week open. SPs. Okay. So so I have noted the clean and clear swing points at the highs. However, with price being below the true week open, there have been no, just going to emphasize no, clear and clean swing points at the lows supporting a high probability long idea. Okay. This is currently representing low probability conditions. Okay, so that's how I'm looking at the market. We're in high probability location, below, all of them below the true week open. There's no necessity that they have to trade back above it, but I'm looking for high probability longs, and because we have no clear swing points, reference points where liquidity could be very visibly placed below, it's not high probability for me to take a trade or to look to frame a trade. Okay, so we're going to play on price action. We're still going to analyze all the particulars heading into the New York session, which technically has begun. Okay. So, what do we have? So we've got the London low. Okay. We've got no London high. We've got, sorry, I'm just going to go back to, we've got this to be fair, if we're taking, so price rebalanced this fair value gap there, so I'm looking at this as the range. 4-hour range. Okay. That's what I'm looking at, and this is the first SIBI that's forming in there. Okay, so that's why I'm looking at that. However, what I actually want is a long position higher. Okay, so taking that same high into consideration, I'm going to obviously be looking at the same thing on NQ and on YM. As we can see, equilibrium here, this is already being rebalanced, so this is key. If this gets traded to and through this level, which I'm going to mark up, that would give the indication we're going to seek higher prices, because there's no reason for price to trade back to that level. Okay, if it's weak. If it's weak, there's no reason for price to want to trade there. Okay, or certainly trade through it. Okay, and finally, do the same thing for YM. Keep our charts very consistent, and we can see. In fact, I'm just going to copy this one to make it quicker. Okay. Right, okay. So potential H4 inflection point. Can take off premium discount. It's not necessary to keep that on. It was just primarily as a visual aid to determine a potential upside target. We can see price traded into here. Okay, so I'm just going to mark that up. We do have one below, and in fact I will mark that up just for completeness. Despite the fact that I know it's there, I think it's important just to sort of mark up. We do also have a possible BPR. Looks more obvious on NQ and YM for that matter. Okay. Okay, and the final one here. Like I said, the top one's the important one because price actually went in there to rebalance, so that's key. I'm not really. We have one here again. If we trade through and close through this CB, highly likely we're going higher, but the 4-hour fair value gap, the 4-hour CB is to me more important. Okay, so we've got the London lows. There's no clear high. It's traded through Asia high, traded to and through it. So again, really emphasizing the likelihood of continuing higher. Okay, so is there anything else needed? for completeness actually just put in the BPR. Okay. There's a small BPR here. Yeah, not a massive fan of that. Okay. I'm going to drop down to the 15. Okay. We want to put our news embargo in. This is just for reference. Volatility will come in the form of the equities open, so we certainly want that for reference. Okay. So, as I said before, we've got no additional H1, so it's not conditions I would trade in. We're going to use the 5-minute till we get to lunchtime, and let's just speed that up a bit, and let's see what happens with price, whether it respects this BISI and then continues higher, or whether it trades down to the SSL London, purges, trades higher, or it consolidates following this expansion here. Okay, so sorry about that. News embargo. As we can see, minimal volatility. Likely to see something at equities open, so we'll take a look. But the market is not really expanding at all, which is kind of what we were expecting. Opportunity for it to do so now, and that's promising. Okay, market appears to be expanding. Oh, maybe spoke a bit too soon. We'll see. Bullish certainly overall from a macro perspective seems to be the more plausible play, because we're trading below the true week open. Okay, it's going to pause it there. So we got some volatility. The market's now traded down. Appears to be targeting the SSL London low. So we could certainly see a purge of that, and then the market look to continue higher. Alternatively, we could see that the market just trade in close proximity to it, not violate it till tomorrow, which potentially would give us a potential opportunity to engage the market. But currently, there's nothing for me to engage, Nothing meets my model. Again, there will be traders that will look at these conditions and be happy to engage because it fits their model. That is for them. That's not for me. So I'm happy with the model I have, the things that I look for, and by all means utilize the things that I'm discussing in these vlogs to help improve your trading, your analysis, and so forth. Okay, so we are at 11:15, so 45 minutes left. We'll see. Does look like this is going to be a relatively short day today because alarm, nothing really happening. Okay, market finding support at the lower of the BISIs. Okay, let's see what the next 45 minutes is going to present, which is interesting. Let's just drop out to the hourly, see what we got. So we've got a New York high, which will mark up. Okay, just bear with me 1 second. Okay, I'm right back. Okay, so yeah, as I was saying, we do have the New York high here, which we want to mark up. Price is just currently within this range. Okay, and want to transpose that level on the others as well. Okay, so there we go. Quite telling if this candle closes above the SIBI. I am going to remove this one, and the reason being is because we traded down into the lower one with the bodies of the candles respecting the BPR. So that's supporting the idea of higher prices. And although in relative close proximity, the likelihood of this trading higher, but let's see. We can continue with price for a little bit longer and see what it does. We've got some key levels marked up. Time is 12:30, so we're in the lunch period. And now heading into the PM session. So what we can see relative to the hourly is how The market opened, we traded briefly below the true day open. The market's expanded higher, seeking liquidity above the marketplace. Blue traded into this fair value gap there. Market set the London low and then the New York AM high. It's repriced down into the lower BISI formed within London, and now is rejected from there. But the market is still in a consolidation between these two key liquidity pools. Okay, so ultimately we would want to see one of them purged, but for now let's just see what ensues for the remainder of the session, or the majority of it. I for one would like price action to close the day in close proximity to the low. That would potentially set up for a high probability trade model tomorrow. Drop down to the 15. 2:45, so just another hour. YM is very close to the London low. Looks like the market is engineering liquidity. Engineering liquidity obviously here, taken liquidity out here, but it's certainly engineered liquidity at the lows here, as you can see. YM is traded into that London liquidity pool. They all could purge at this rate because they're all in close proximity. So let's just a couple more candles, and they've all purged. Okay, so I'm going to leave that there. It's an extremely interesting day. I am traded back into reuse its fair value gap, reclaim should I say, fair value gap. So I'm going to put that there. So again, low probability conditions for me, nothing for me to engage in. I'm not looking to try and force the market. I'm looking for a high probability trade setup as per my model. So, I appreciate that, we've had a number of days where I've earmarked it as low probability, but those are the days where you're probably going to learn the most, because the idea is you want to avoid low probability days. You don't want to trade in them. Now again, it's low probability to my model. That doesn't mean that it's a low probability day to somebody else's model. Okay, so with that being said, I'm going to end this session here. It's been quite a relatively straightforward session in the sense that it was obvious that we were likely to get some form of setup. That hasn't transpired. Market certainly appears quite weak and heavy, but we'll see if tomorrow presents an opportunity. So just got to remain patient. When the setup comes, we'll know, and then just need to be ready to execute when the opportunity is there. So hopefully you found this enjoyable. Hopefully there were a number of insights that you could take away from this session, and I will catch you guys in the next one.